Hello everyone, welcome to Free Conversation Lovers. Today we want to talk about stock market. And welcome to us, Klebestift.
Yes. Yes. Hello, Lufer. Thank you for joining us today. It's such a pleasure to have you here on the podcast.
Yeah,
And
sure.
hello everyone. We're interviewing Lufer from Germany. He's an expert in stock market. He's a professional in the investment field, and I'm pretty sure that today he's going to share some of the most important tips about the stock and also stock market. Yeah. And before listening to the podcast, please subscribe our YouTube channel. We post a podcast there. You can go to our YouTube channel, listen to the previous podcast, and place a comment on the podcast and mention your ideas. So, Lufer, do you think it's cool to buy American stocks?
Yes. So safe to say that in the American market, for example, the S&P 500 is outperforming other indexes in their field. So, for example, if you look at German ETS, yeah, if you know what that is, um, they're quite outperforming in the last decades. So, but it's really depending on the stocks itself, if you should invest. Like you should always grab like the opportunities, how weird that sounds like. But there's a lot of people, if they're new to the stock market, that they have kind of a syndrome of being too greedy in the start. Like for example, you could have made like a 4% gain, but they go instead for a 7% gain or 10 or 20, yeah? Instead of just taking the safe bet and being like, I could make this, like I could take this opportunity for myself to make a profit. Nah, this is too little. Yeah. So one advice I could give is like, if you find an opportunity of making money and you're sure about that this will be like making this action would actually gain you any benefit, then you should do it.
Yes, and
So it's very dependent on the stock itself. Um, but yeah, the American market is kind of outperforming other comparable ones.
that's pretty good. And before get deep into this topic, why do you think it's necessary for everyone to invest by buying stocks? Why do you think it's important for people to invest in the stock market?
First, you need to think. In your example, yeah. For example, I know you're both Iranian, right?
Yeah, exactly.
So the average payment from what I got from you is like um, 3 digits in dollars, yeah. What is nothing in comparison to Germany, for example, like in the lower 3 digits of average salary. So but you need to think all gains in the stock markets or in investments in general, they are by percentage. So it's the same when you invest all of your monthly salary that is sustained by $100, or if you have 1,000 or 10,000, if you get the same percentage in your surrounding, like your spending that is, or your expenditure that you have on regular base, yeah, or the wealth that is required for you in your country, for example, to buy a home, um, would be the same. So you gain by percentage, not by absolute numbers. So doesn't matter actually if you're a poor country or a rich country, so long you're having like a high dividend inflow or like a higher earning through investments, it's always beneficial. Yeah. So but it's more likely that if you're in a poor country, obviously that you wouldn't have not that much capital for you to invest. But if you can, it's also an option. It's not like just because you earn less money than American, you can invest. So
So you mean during the time you can dramatically increase your money with investing in the stock market?
um, for the average investor, not necessarily dramatically. Yeah, there's also questions you need to ask yourself. What return can I expect, right? So, for example, the S&P 500, yeah, like the biggest 500 companies in the US, they made an average of like 10%, something around that per year. So this is, if you would invest into an ETF, this is like the minimum you could technically expect from yourself. But outperforming that as a new investor becomes incredibly hard. Um, most of like most problems people have is not necessary by knowledge, but this is also a very big part. But it's more of trading psychology in a way. For example, it's like I have money on my account I have to spend, yeah, even if there is no opportunity. Or there's like um, there's also the thing that people try to do extensively more than they have to. Like for example, you made an investment, right? And you're thinking like, oh yeah, I need to hold this for 1 year. What I expect would give me a return of like 10%, for example. And there's some people that move their money around, like they sell and buy, like it's kind of getting um, into day trading, yeah, what people are just not fit for. Yeah, and also day trading I would not advise in general, but this is a different topic. Um, but yeah, a lot of people try making more money by their influence from their acting, but this is just worsening their performance. So it's just being patient a lot and um, calculating risk. Yeah, having money comes from keeping money. So you should avoid losses. This is like risk management is like a big part of investment.
Mm.
Yeah, exactly. And how's the brokerage fee for buying global stocks?
Um, usually they're like I would divide it into two different broker um, kinds. There are first the banks, like you can like every bank can also allow you to invest, and there are also the new brokers, right? So it's more accessible. It's like less effort, but also less guidance or service in a way. But usually, for example, in Trade Republic, that's like a German company, there you just have a €1 transaction fee for everything. Yeah. But there's also kind of a controversy about that, that this is kind of misleading newer investors and that's kind of like making them day trade in a way because transaction fees are so low that they can sell and buy and like in terms of seconds or minutes. So um, you can expect technically in Germany, for example, with Trade Republic, a fee of like €1. But also like if you go into a traditional bank, the fees can increase highly.
Yeah.
But for example, if you invest into an ETF, um, um, there usually it depends on what you buy on the stock market, for example. If you buy a single stock, do you buy an ETF or a derivative or anything else? For example, if there's a very low volatility of something, right? So it's not commonly bought, like a very, very young stock, it's of an unknown company or whatever, or like a derivative of something that is not often traded. The volatility, so the movement of the price is very low because there are not many buyers and sellers. So if you want to buy something of this stock, the stock can increase, like the transaction fees of the stock can increase massively just because it's not like it's an like illiquided stock, so there's not many people around. So it's harder to get, and that's why there's an increase in this specific stock for transaction fees. So there's also, but mostly there's a warning if you go on a trading platform and you want to buy a stock that's like with very low volume. Usually there's like a warning sign that tells you this stock, for example, has um, an increase of transaction fees of like 58%, for example.
Yeah, and do you know the best brokers for buying stocks?
Uh, Depends really where you are. For example, for me personally, I would say Trade Republic is a good alternative, especially for new people. But it really depends on where you are, potentially which language, yeah. If your is your language supported, for example. Like if you're not well in English, I would not advise you to force yourself to go into like an English platform if you do not know a lot of vocabulary for that. So um, the best choice would be like one that would be in your native language and with low transaction fees and a big offering of like ETFs, different stocks, and also like derivatives that you're not excluded from important stocks or things that you want to get with all means.
Yeah, and I heard if you have invested in Wall Street's Nasdaq Q index, which includes Facebook, Apple, and Tesla, just $500 in 2008, your portfolio would have grown to over $15,000 in 2020. It's like 300% growth.
Yeah, yeah. On this point, like the tech stocks like Facebook, Amazon, Apple, and so on. Um, Personally, I would not advise someone that has like not a lot of capital to invest into these stocks. It's not like they wouldn't make profits. I'm not like I would be sure that they would make any profits in the next 10 years. For example, Amazon. Yeah, like I would be assured of that for sure. So you would make money in this time period if you invest into the stocks right now and keep it for this time period. Yeah, but I would not advise you necessarily with not much money. Um, Because me personally, I think if you invest into new companies that were not as big, so small cap companies, there your money has more impact. Yeah. For example, if you have a company that has like a market capitalization of 1 million and you have 10,000 euro,
Mm-hmm.
right? Um, you're already making with your investment 1% of the whole market capitalization. Yeah. So your money has more impact if you invest into smaller companies, and they have a higher chance of growth because they're new and their potential isn't expanded yet to their maximum. But also there's a higher risk because they're a new company, less established, unknown management, and also other things like maybe um, unexperienced. Um, there's like there's the magic triangle investment. Yeah, it's security, profitability, and accessibility. So you can never move into one corner. Like you can't never have high profits and no risk, or like high profits and always high accessibility of your money. So it's the only thing you can do, for example, if you go for higher risk, that by your choices and your actions, you can lower the risk. For example, you make a stop loss order. So if your stock falls below 20% of the value you bought it, that it sells automatically. So you cut your losses in this way. Um, and obviously making a lot of research in the long term of an investment. Because you need to think, even company, like the stocks presents the company and the company presents the stock. And this is like the most important thing. If the company is doing well in the long term, for example, they're 10 times um, um, the size of the company and the revenue increases and all such things, the sales increases. If the company is doing well, the stock will also. So you should always make inform yourself about the company you're buying, and if it's well performing, the stock will also.
Yeah, pretty good. I really agree with you. And I also like to, invest in small companies because they haven't grown yet, and maybe they will do something new, they will make new technology. So after that, you can have dramatical increase. Yeah.
Do you have any more questions?
I'm here.
Yes, and which brokers have more stocks from around the world?
Um, hmm, this is actually an answer I can't really tell you. Like I literally don't know which broker has the biggest offerings. Um, but one thing I can say for sure, if you only choose from the offerings and ignore everything else, for example, transaction fees and whatever, like the biggest offerings isn't the best choice. Yeah, it's just for you the access for looking after stocks in their portfolio they can offer you. But usually with like I don't know 3,000 companies all around the world or like 6,000 or whatever, you're already it's like enough you can make profit off. It's not like you would be in a shortcut or anything. And if you really need access, for example, to special markets or like region-wise access to special companies, for example, in China, then you need to have an extra account, like an extra depot for that. But this is not really an issue. So just I would generally just say um, choose the one that has the lowest transaction fees, is in your native language, and um, has like a normal offer where you can work with. And obviously normal functions like limit order, stop loss order and such. This would be like the only criteria I would choose as a broker from.
Yes, exactly.
Yes. And some stocks are really good to buy, like Tesla. Who would have guessed that Tesla shares would be 800 higher than they were a year ago? Can you offer us a good stock like this?
Um, you need to think. Actually, Tesla is selling much less than, for example, VW or any other company, but they have a higher stock price and market capitalization than more established companies like Mercedes and stuff. Even if they produce less, um, and actually performed like company-wise worse than others. It's I guess like in the term of Tesla, it's kind of similar to GME and other kind of meme stocks in a way that people have a lot of faith into the personality of Elon Musk. But by just one single question, you can already tell that this stock is kind of very inflated. What would happen if Elon Musk would die? And what would happen with the company if Elon Musk dies? And you can kind of like tell the question from your own that the stock will fall like a couple hundred euros, I would suspect so. And yeah, the trust into the company would fall rapidly because there's like a lot of people that would have said like if Elon Musk would go to a company. For example, Elon Musk once tried to sell his company, but they
Mm-hmm.
refused. And there were like a lot of people that said, if you would have asked me if I to buy shares in the company or to support him, they would have said no, it's too crazy. So it's a lot of if Elon Musk could not lead Tesla, in my opinion, Tesla would have died a long time ago. Like he himself said, the company was on the brink of bankruptcy, like 2 3 weeks away. So, but I would suspect personally Tesla is um, very overvalued.
Yes, and
So So to go back to your original question, how to find stocks like these, you need to look at stocks that were overlooked, that there's no a lot of popularity around and that were not commonly known. But you see the potential and you see a reason for their existing. For example, you should never buy a stock if you can't explain the stock and why you bought it to a 10-year-old in 2 minutes. I guess that's like a quote from Warren Buffett. So usually in like a low cap companies, you can find the most potential and the biggest growth, but also the highest risk. Yeah, because of Magic Triangle, you can never have accessibility, profitability, and security at the same time. So you either have to sacrifice one of these three things. And in terms of small companies, it's really the security that you're kind of sacrificing because they can easily get bankrupt. Like even like um, kind of juridical issues and whatever can knock them out easily.
Yeah. And if anyone actually has some inside knowledge that the stock is going to be the next big thing, I can guarantee they're just, keeping it to themselves. And, another question that I wanted to ask is that, I mean, I actually don't check my stocks too much. Do you think that's okay?
Um, to start with the second question, I think
Yeah.
that's absolutely fine. Most of the time is actually waiting. Before a stock develops, it's really just a waiting game most of the time because the stock market, like in comparison to the crypto market, for example, it's very slow. Like there are gains that you can realize in a year period. It's really just that over the years that, for example, if you have on a yearly base like an increase of 20%, that after like a decade or two, you become potentially very wealthy or rich in general terms. Um, but there are no usually like overall in your portfolio, for example, Lynch, he had one of the best performing hedge funds ever with like 28.9%, if I have this correct in my mind. And this is like like an exceptional performance, right? But if you would think like 28.9%, but you need to see it in the long term. They're like calculators where you can see compound interest. And if you know that, you can tell like 20 years performing 30%, you're gonna be very rich if you could ever perform this. But the usual, like most people, even experts, usually won't perform this ever.
Yeah. Actually, I really like invest for a long term because I'm not really expert in investing, and I don't have even the knowledge, enough knowledge in this field.
Yeah,
I like
like
to
most people.
yeah, just buy it and
Um,
don't
about,
look at it for 1 year maybe, like not
uh,
like 1 year, just 6 months, and after that we can buy it, or maybe just look at it. I don't know. And about this question
um,
that, yeah, go ahead.
I want to ask, what was your first question again? I answered your second one.
I don't remember. I just wanted to ask you how to pick the best stock that you answer this question. We should look at which stock that has potential to grow. And
Yeah, so if you go down to the detail, like usually the like things how to make profit in the market sounds simple, right? You buy low, sell high, and you pick the best company that has the best prosperity in the future, and and all this kind of stuff. But it sounds simple, but it's like in implementation is like this is where most people fail. Um, so. First, there are like two different kinds of investing. There's value investing and there's growth investing. So I would personally prefer value investing. I'm gonna explain now how it goes. So you need to think. Every company publish their status of the company in a yearly report. and like other ways of information. They give statements to the public and whatever, or they need to file for bankruptcy and they make this public and whatever. So everyone has the same access to the information of a company. There should, at least there shouldn't be any advantage information-wise for a single person. So you have technically the same information accessible for you as a hedge fund manager. Yeah. Maybe not the same knowledge or possibilities, but usually you should have the same way of informing yourself about the company. So how to find a profitable company? So you can first look at their prosperity in their sector. For example, tech companies, and you would suspect, oh, this particular technology in the future is going to rise, right? So if you make this estimation, then you can go further. Okay, so for what do you specialize? Yeah, large cap, middle cap, mixed, low cap. So for example, if you would choose like in a specific sector, for example, um, like cancer treatment technologies, and you go into the healthcare sector, and you additionally to that look for low cap companies. There you have it, 4 different filters already. So that kind of decrease the pool of companies that's going to be shown to you. So, and after that, you look like, oh yeah, I look for this specific thing, and how did they revenue increase over the last years? So, but I guess it's getting kind of too far in a way to explain how to read like their income statement in such of a company to really make like based on knowledge and based on logic decision of if you do you want to buy the stock or not for the long term. I guess this would lead too far, but usually first you need to know for what you're looking for and what strategy you're gonna go for, right? And then obviously you need to have you need to have the knowledge for even judging about a company. Yeah, this way, but this obviously takes a lot of time, effort. But if you really don't have time for anything like this in general, you could just invest your money into an ETF. Yeah. If for example, if you're less of an active investor, so there's like growth and value investing, but there's also passive and active investing. Investing is what I do, like to try to outperform the market. But as a newbie, you can forget it. Usually you can forget it. Like if you have no experience at all about economics, looking for evaluating companies and whatever, do not even try it or like getting something around 20%. Or you can try it, but the promises of that really being accomplished very low. So the easiest thing to gain really anything and not getting into loss as a newbie into the markets in ETF. Exchange traded fund where you just invest into, for example, S&P 500, biggest 500 companies in the US, and their growth of these 500 companies, like the worst and the best of these overall still make an increase of 10%. So you make 10% revenue from your investing. So yeah, really no, like if you really want to get so far actually actively investing and making a profit, like net profit, and then beating the inflation and then beating actually the average earnings of an ETF, a lot of time will pass and a lot of effort will pass also, and a lot of money will pass away from your hands. There's like no avoiding of losses as a newbie in the stock market. Like sometimes you just have to fall for mistakes to learn, or like this is the best way how to do it. But yeah.
Yes,
Yeah,
exactly.
exactly. And by the way, tell the
And
listeners what is ETF.
Um, an ETF, exchange traded fund, is a replication of a market. For example, the S&P 500. So it's like an index that replicates these 500 stocks and makes it buyable for you. So it's kind of taking the effort away from you buying every stock or partial stock of every company yourself. Obviously, you don't have time or the willing for buying 500 stocks every time separately. So you just buy an ETF. They are not actively traded, but they're just replicating. So like there's very small fees, at least in the European Union. Um, for an ETF, usually like 0.19% or something that you have to pay yearly. And yeah, it's so an ETF is a replication of a market or like specific sectors or similar. Yeah, it really depends on what an ETF is. There are two kinds of ETF. One that gives the gains to you directly. I don't know the English word for that. In German, it's called Ausschütten. Um, revenue given, I guess you could kind of translate it this way. That, for example, if you make 10% from 10K in a year, this 1K is just going to be transferred directly to you. And there is also the kind that in German it's called tesorierend, yeah. It takes the gains and reinvests into the ETF. And this is like the only way you can profit from compound interest. So like, for example, if you have 10K and you get a 10% gain a year, then you have 11K. But the year after that, you don't have 12K, but 12,100 because the 1,000 you gained last year will gain also 10% over the next year. And this is very powerful tool. Like you need to see it in the long term that, for example, 30%, that's after 10 years, you already like tripled what you have invested overall into an ETF with like a 30% increase or even more. I would expect actually something around 5 times. So yeah, that's kind of a summarization of what an ETF is.
Yeah, that's
yes,
pretty good.
exactly. And yeah, and I'm sure the listeners have learned a lot of stuff, have learned a lot of tips from you, like today. And just like everything else, investment takes time, and it needs research and study. So
Yeah,
thank you for joining our podcast today. Thank you for sharing this information with us and also with the listeners. And everybody, thank you for listening to this podcast. I'm sure I hope you enjoyed it. But don't forget to subscribe us and don't forget to listen to the previous podcast.